This is Andrew Stotts of A Stotts Investment Research. Are you ready to become a better investor? Today I'm going to talk about the Malaysia Equity FVMR Snapshot, or what I like to call Malaysia in your hand every week. When you sign up for this, you'll always be up to date because every week you'll receive this updated FVMR snapshot. You'll know all the numbers. This one page covers FVMR, fundamentals, valuation, momentum, and risk. You'll be professional because you're going to use the same information that institutional investors and fund managers are using. And most importantly, I love this one, you do nothing. After signing up, you'll receive a one-page PDF every Monday morning with updated numbers. So let's get into it. The Malaysia Equity FVMR snapshot starts with fundamentals. And in this case, we can look at Malaysia versus the world. The ROE of Malaysia is less than the world by almost 2 percentage points at 10.5. So it's a relatively low ROE country right now. We do have high returns that are happening in the telecom sector. Now, if we look at dividend payout ratio, we see that the Malaysian companies actually pay out more dividends than many of the other companies in the region and also in the world. And some industries, such as telecoms, are paying out almost 100% of their dividends, their profits as dividends. Now let's look at valuation. So what we can see here is that the healthcare sector is extremely expensive, and we can see that financials are relatively cheap within the Malaysian context. And Malaysia is a bit expensive on PE at 15 times versus the world at 13.9. Price to book, though, is slightly less than the rest of the world at 1.6. Some industries are super cheap, such as the energy sector, which is very cheap at this point, and an expensive one is the telecom sector. If we continue on with momentum, what we can see is this is earnings and price momentum. And let's start with earnings. And we can see that the expectations, or 2016 expectations, are almost equal, about 3% expected across the world and in Malaysia. But we can see, obviously, the energy sector has been hurt because of energy prices. What we can see also is that the consumer staples and the healthcare sectors are doing relatively well. In fact, the high PE that you're paying for the healthcare sector is somewhat justified by the fast EPS growth that's there. Price momentum, this is how much the share prices have fallen or risen. In the world, share prices are down by about 8% over the last year. In Malaysia, about 5.9. So a little bit less price sensitive. Consumer discretionary sector has done okay over the last couple of weeks. And then telecoms is actually performing quite poorly right now. And that's a great sign, that telecoms one, that even if sometimes the fundamentals are good, and the momentum in earnings may be good, let's say, but the price momentum may not be good. Now we look at risk, and risk is about gearing, meaning net debt to equity, and about price risk. So we can see that energy sector is highly geared in Malaysia, and material sectors is very, very low geared. If we look at price, we can see that now this is the volatility in price, and what we can see is that Malaysia's volatility over the last 3 months has been 8% versus 13% for the last year. Generally, the volatility of the Malaysian market has been low over many, many years. Energy sector is where the most volatility is right now, and then we have a small amount of volatility over the last 1 year in the financial sector. So that wraps up the Malaysia Equity FVMR snapshot. Remember, when you sign up, you'll always be up to date. You're going to know the numbers. You'll be professional, and you'll do nothing. You just sign up below, or go to the bobbynow.com/FVMR-snapshots if you aren't already there. Have a great day.